These are the type of insurance questions that don't involve a table of some sort. So basically, the formula that I gave you is not going to work with this type of question. So you just need to read, and everything you need to know is in the question. All right. So let's read this and answer it, and I'll just give you one example, and that'll basically be it for this type of question, and then it might show up on an AC down the road. Okay. So Jamie's home insurance is $1,600 annually. What does that mean? That you're paying that much every year. Okay. She chose a comprehensive policy with an $800. There's an $800 deductible, so that's somewhat new. We haven't seen $800 deductibles. You've only seen what, 500 and 1,000, right? 200 and 500. That's what I was trying to say. Okay. So $800 deductible is different, but that shouldn't scare you off. Okay. We don't have a table here, so we're not gonna go off of that. We're already told how much we're paying, right? The insurance company offers a 10% discount, right, on the following year if there are no claims made during the first year. So you get a 10% off your second year premium. So calculate the cost Jamie will pay over 2 years if she's claimless the first year. What does that mean? Claimless. There's no claims, right, during the first year, but makes a claim for a damaged roof after a storm in year 2. So how much would you pay in total in this scenario? Okay, so let's see here. Year 1, you're paying $1,600, correct? That's your first year of insurance. You got to pay the whole thing, no discount. Year 2, how much are you paying for insurance? It's $1,600 minus 10%. What's 10% of $1,600? This is mental math. 160, right? 160. Discount. So the insurance company says, hey, you didn't make any claims during your first year. Now we're gonna, for your second year premium, because you always pay kind of either monthly or you pay it all in one shot. But you kind of pay ahead of time, you pay in advance. So we take off $160. But what happened year 2? What else happened? You made a claim. Your roof was got damaged, correct? So how much will you have to pay for that claim? As soon as you make a claim, you pay your deductible. Could be $20,000 for a brand new roof. You are responsible for $800 because you made a claim, $800 right away. So this is your discount. So year 2 is a little messier, right? Yes, you get the discount because first year you had nothing, but now you're also gonna have to pay the $800 deductible. Okay, so if this had been a $500 deductible, you would have added 500 and so forth. Okay, so year 2 is different. So let's do the math here. 1,600, I guess, minus 160, that is. So your premium is down to $1,440, but because you made that claim, technically year 2 you end up paying $2,240. Let's read the question carefully. What is it asking? Calculate the total cost that Jamie will pay over 2 years, over a 2-year period. So what is left to do here? Total is your $1,600 plus the $220.40, right? $2,240 there. You add that up, and there it is, over 2 years. And this is how much insurance will have been paid. Okay, and if you want your discount a different color, right? Where did I get the 160 from? That is right there. That's what I applied there. And if you're wondering where the 800 comes from, I know it's going to get a little messy here, but I'm going to highlight the $800 deductible here, and then just highlight that 800 there. So when it comes to a house, you always pay the deductible as soon as you make a claim. Okay? All right? So just one change Jamie can make in order to make her insurance policy. Sorry, what does that say? Suggest one change Jamie can make to her insurance policy in order to reduce her premium. Can you, to this I would expect you to have an answer already. Look at this, look at some key words here. She has a comprehensive policy, correct? So what should she switch to instead? Standard, yeah. So that's one suggestion you can make. Switch to a standard policy. There we go, done. What else? What about the deductible? Should you increase it or decrease it to pay less on your annual premium? It's actually counterintuitive. You increase it. The higher your deductible, the less likely that you make a claim. Okay? So increase her deductible. There we go. Don't put down move. More than likely they'll make a scenario where moving is not an option. Because let's face it, in the city of Winnipeg, yes, your house, right, but the area, moving around Winnipeg is not going to change necessarily your premium if you're staying in that same category of house. It's not going to be a big significant change. Yes, it's going to be cheaper if you go for a cheaper house, but that's normally not the scenario. What about the next question here? Meridian is considering and purchasing 2 houses that are located in areas 2 and 4. So 2 houses that are being considered. They're in different areas. Explain why the home insurance in area 2 is less expensive than in area 4. Be specific. What would you say to this one? What does the insurance, what is it based on? I remember telling you when we started insurance. Julian? Emergency services, yes. Yeah. And so you would just say area 4, right, may be more expensive. Maybe, sorry, let's just say this. Let's get to the point. Maybe further from emergency services. Like a fire hall. Would also be okay. Or you might have to say it may take firefighters longer to get there. Anything like that you're indicating that emergency services are the root cause of the problem. Okay? So that's it. This is supposed to go to page 54. That's ideally where I would like it to go. And so if you go to 54 and just fold the corners of both pieces of paper over like 3 or 4 times, it'll stay there. That's usually what I do. Okay. So this is a no table question, no table insurance type of question. What else have they done? Just listen to what I'm saying in these cases, because sometimes you just, if you have heard it before, you're not going to be shocked about it. So one year they had that someone is paying, let's say, $2,000 for house insurance a year. And they chose to get extra water protection, like water damage, for like an extra $200. That's it. So you just had to add the two together, and that was it. That was a 1-mark question. Sometimes they give you one as a yearly amount, and they want to know the monthly amount. So obviously I would expect you to divide it by 12 to get that. So not always do you have to use that formula that I gave you for the table. Okay, that's not always going to be the case. I'm going to back up a little bit here because I remember going over insurance and I kind of skipped some of the. Here's that comment that I made on top of that table. This is on 44, page 44. Areas depend on the distance from emergency services. I did tell you that. And we're going to back up even a little bit more, going to homeowners insurance. On 43, go to 43 real quick and just grab a highlighter, and I'm just going to highlight some of the things that affect your insurance. 43, and then we'll go to property taxes. No AC today. Yeah. 43. So obviously homeowners insurance is more expensive because it covers the stuff, the building, and it covers you from liability. Do you remember what liability is? That is damage that your property or you yourself may cause to others. So let's say you're mowing the lawn. I don't know if this is an auto pack claim or a house insurance claim, but you hit a rock and it flings it to your neighbor's. Let's say it flings it to the window and you crack their window in their house. That's a liability thing. You caused it, right? They actually know the cost. It's not just a bird flying into the window, right, and possibly cracking or causing damage. This is actually you doing that. So it covers you there too. I will even tell you this. You may use your house insurance if you lose something really expensive, like you're on a vacation trip and you lose your iPad, and your iPad is like one of those fancy ones. Like, what are the latest ones called? The one that are like super big? I don't know. The Pros? You know what I'm talking about. If you lose that, you can actually use your house insurance sometimes to claim that loss, and they will reimburse you. However, what's your deductible? You got to watch out. If your deductible is $1,000, do you really want to go through the effort of claiming it? Because you're going to have to pay $1,000, and now your insurance has a record of you making a claim. So that may potentially increase your premium down the road. So, but there's something that you can definitely look into. House insurance is for people that own, right? Owning a house or condominium. And here I also want to highlight the fact that insurance covers you from fire damage, burglary, flood, and storm damage potentially. I will say flood and storm is very dependent on the fine print. Listen to this part, okay? Insurance is complicated. Remember you researching insurance a little bit with when it came to vehicle finance? You know what a broker is? Insurance broker is the person that sells you insurance. It's the place, right? They sell car insurance, home insurance, different companies. And so they are the ones you want to ask questions about. Okay, listen, if my basement floods in the spring, am I covered under this policy? Ask. And they'll say, actually, this one doesn't cover. So you need to buy extra insurance for that. I have 3 different water damage protections, and it's super expensive. There's one that comes from underneath your basement, like if it floods from underneath, like the water rises underground. I have one that covers when it comes from the top through the window. And one is like if something bursts, like if a pipe bursts or something inside. So I opted into all of those, which brought my insurance up significantly. And here are some some factors that affect your insurance. Just have a couple on your study sheet, right? So location, where you're located, right? There are 4 areas, okay? And I will just say emergency services again. Emergency services. That's what determines which area you're in. I would disagree a little bit on that, but that's what the province wants us to say, so we'll say what they want us to say. Type of coverage, is it standard or comprehensive, right? The value of the home. Any additional coverage that you may want, right? So if you want extensive or extra water damage insurance, you can do that, but it's going to cost you, right? Your deductible, that also matters. if you have a $200 deductible and you're claiming a $500 window smashing, like a smash and enter, break and enter, right? Somebody breaks your window and gets in. Guess what? You're gonna take the 200 off the bill, and the insurance company, right? You get this, right? You get the 300. If you have a $500 deductible, how much will the insurance company give you? Right? You'll get zero from them, because they'll be like, well, no, like your deductible is $500, so you're responsible for the entire amount that you're claiming. Okay, so that's something to remember. So these are all things that add potentially. Most of these add, but then there's also some discounts. So that's on the next page, I should say, on 44. That's going to conclude insurance for the next little while here. So if you have a discount, claim-free history, the longer you remain claim-free, the cheaper your insurance will get over time, okay? They actually do ask you if it's a smoke-free home. If people smoke in the house, then insurance goes up a little bit, and you can only imagine why that is, okay? Do you have an alarm system? That's 10% discount, just having an alarm system, folks. And if it's monitored, you get an extra 5% sometimes off. So it's a good thing to up your security system. And then the building itself, right? That could also affect it. Is it a 2-story? Is it a side-by-side? Is it a condo in a big block? Or is it just a standalone? All of those things affect the insurance, of course. But I think if you just remember the value of the home, the age of the building, anything like that, you've got tons of things that affect your insurance here. And the reason why I mentioned so many is because they may do a multiple choice here. Which one of the following may affect your insurance? And if you've seen them all, you kind of know which ones are. So therefore, I right now cannot think of something they would throw in there that would not affect your insurance. But probably your age. If they ask, like, does your age affect insurance? That wouldn't affect it. Okay. Oh, one last one. This is new. Your credit score. And you're like, what does your credit score, what does that have to do with a discount? They found that there's a very strong correlation between having a good credit score and not making any claims. So if your credit score is high, then you're less likely to make a claim. Insurance companies like that, so that's an easy way to check up on you, because your credit score is publicly available, right? So that's that. That's it for insurance. So we've talked